Hey, it's Mike, and today I'd like to talk about Churchill Capital Corp. The stock trades on the NYC under symbol CCIV. The stock was up over 8% during the day. However, it did plunge over 30% down to $40, and it's probably going to go down a lot lower after that. So, for those who don't know, Churchill Capital is a Spac, and the stock was running up on rumors that they were going to do a deal with Lucic Motors. Then they announced they did the deal, and then they said the price is going to be at $15 a share. So stock go down pretty much. So, the one thing I want to talk about with these SPACs is this is a very tough game to play as far as SPACs are concerned. That's why I generally tend to avoid SPACs because, you're basically paying for a blank check company. So it's almost like buying lottery tickets. So if you do buy a lottery ticket, you need to own like a lot of SPACs, like 5 or 10 of them, because you don't know which ones are going to really do really well, which ones are going to, for lack of a better term, screw you over. And with Churchill Capital, this definitely looks like people were screwed over pretty hard. So, the thing I would say that if you are going to invest in SPACs, own a nice spread of them, own at least 5 of them. It's kind of like the same strategy I have with penny stocks or like the pharmaceutical stocks. I own 5 or 10 of them because one is you don't know which companies are going to have, which pharmaceutical companies will have a bad clinical trial, or which one of them are, for lack of a better term, lying about their results. So I think the lesson to be learned here is just do not put all of your money into one SPAC, or do not be overly weighed on one SPAC. Now, that being said, when Churchill Capital and Lucic do merge and the stock becomes the Lucic Motor stock, is this a company worth holding? I definitely think when the stock stops moving down and the merger is done, I definitely think that Lucic Motors is going to be a company that's going to be worth investing in the future. Electric vehicles are going to be the dominant vehicle probably 10 years from now, and Lucic Motors does have a really nice vehicle that I think a lot of people, they're going to have really excellent sales. Even though Tesla will continue to be the dominant EV maker, there's still going to be a lot of space for other companies to thrive. I mean, if you have a company that has good car design, they have good infrastructure as far as the electric charging network and all that, and if people just like the vehicles, they're going to do well. So, like I said, probably would not touch. I would not short these stocks. I don't short stocks, so I wouldn't play that game, even though the SPAC will probably likely head lower. But like I said, wait for after the company merges and this becomes the Lucic Motor stock, and then from there, I think would be a nice opportunity to get in there, because Lucic may not become the next Tesla, but it could definitely be a stock that will do very, very well over the next decade. So I hope you enjoyed this video. If you did, please be sure to leave a like and go ahead and subscribe and turn on notifications. I do multiple daily updates on stocks, options, and stock trading strategies. Thanks a lot.